But yes, sir, to discuss more about the markets and where it's headed, let's quickly get on board with our next guest of the show. Joining me is Anil Rego, is the founder and fund manager at Right Horizons PMS. Anil, good afternoon. Infosys Investor Day today, and we have the collaboration with Anthropic. We even had Nandan Nilekani, who's been saying that AI will be redefining jobs, growth models of Indian IT. For you, what is the kind of transformation you're expecting for Indian IT?
Yeah, so finally, I mean, it's been something that I've been talking about, that technology will disrupt technology, right? So that is something that we are seeing right now, and AI is, disrupting technology. And my discussions with various people, including yesterday CIO, for global organization, and use a lot of IT services companies in India. I think clearly, we are going to see the way coding happens and the way IT services perform is really going to change significantly. So now the question is how many of them are able to sort of transform themselves. You have some of the low end maintenance work, etc., which is slowly going to get impacted. Some of the larger projects again are going to get impacted. So I think going forward, a lot of it will be AI. I think while lot of it has been said, and there have been issues on whether IT services companies will be able to survive. I think the opportunity of AI also is great because I think companies will come back to IT services companies to implement AI. Right, all the larger multinational companies are unlikely to do it on their own, and you don't have that volume of talent if everybody just wanted to do it themselves. So I think you will get the benefit of it. Now it's a question of declining traditional business and the new AI business. So who is able to get a larger share of the AI, get reskilling done for the employees? I think are the ones who will sort of do well. So AI, the good part is a lot of the companies, whether it's Infosys, even companies like Coforge, Persistent, etc., have taken certain steps. They made acquisitions. They are doing partnerships, and definitely Anthropic deal of Infi is going to do well in the long term. But the question is still remains how much of the traditional business will go down, right? So it's a difficult one, and I think we'll have to watch and see how the companies are able to transform.
Okay. Yes, you pointed out the right thing. I mean, the street's concern has also been whether this AI can translate into a sustainable revenue growth. Just as how SaaS changed businesses thought about software pricing, AI will also driving the change. Anil, for you, I mean, what is the kind of revenue growth model will Indian IT transform into from the current fixed price?
Actually, I think they are going to maybe struggle for some time because, like I said, some of it is going out, some of it is coming in. I think if they're also able to maintain, because the projects that are going out possibly are larger sized projects, right? And the ones which are coming in are going to be smaller, but of course they may be more remunerative, and margins may be better. So I think on revenue growth, I'm definitely a little concerned, and I think if they're able to do a 10% type of 8 to 10% revenue growth, I think it will be good.
Okay, all right, got it. I mean, we did see how the Anthropic fears had rattled the global markets. Do you think that the worst is over from here on for the Indian IT sector, or there could be some volatility until we have more clarity on how these changes would be looking like?
No, I think there will be a little bit more volatility because one is not everybody will be able to transform and change. Okay, and the percentage of transformation also is a little unclear. So I think there will be a little bit more of uncertainty for some period of time. Okay, but once the new AI projects start coming in, and that is when I think, and people are able to see visibility over the next maybe couple of quarters. I think it's where uh, I guess the market will stabilize and do well.
Okay, got it. But Anil, at this time, what would your suggestion be for investors when they are approaching Indian IT sector? I mean, would it be a buy, sell, hold? Any recommendation?
No, I'll be a little cautious. So I won't be in a hurry to enter. I think one can give it time, and even if one wants to enter, maybe do it in a phased manner. But the most important is step back and say, which are the stocks which are sure to benefit from AI in a larger way. Maybe it's a good to study, the revenue profile of all of these companies, and ones which will do better, possibly are the mid cap ones. So at a time like this, I may like to be closer to the mid cap ones because for them change and transition is easier on a sort of a lower base. Okay, so that is something which I would be a little cautious of the really large names.
Okay, okay, all right. You're a little bit caution at that front. But okay, let's shift the paradigm. We've seen how internet stocks have been doing quite well, especially when it comes to their top line performance in the third quarter. So for investors who've been hunting the growth stories, do you think that this is the segment that they need to be?
Yes, so I think what will become important as time goes by, one is revenue growth, but okay, how's profit growth? So hopefully, a lot of them will also will reflect in the long term. But yes, I think a combination of looking at it for a growth sector, if you're looking out for, I think the internet stocks are a place to be. But again, I would not, go overboard on it. Okay, but definitely for some allocation, I think these stocks are good to have.
Okay, okay, got it, got it. But we have seen that metals, they have driven the third quarter earnings performance. Do you think that it's sustainable, at least in fourth quarter and of course FY27?
Yeah, I think metals have, done reasonably well, and possibly they will sustain, right? So, however, I think a lot of it will depend on the global side rather than India for metals, because how do, prices move on metals, and what are the global triggers, etc., that you can see for metal prices. In the, let's say, if I look at a 6 months to 12-month type of time frame, I would believe that, even if you see volatility in the short term, I think metal stocks would come back and do pretty well for the medium term.
Okay, got it, got it. Anil, any sector for you that's a clear avoid at the current time?
Yeah, so see, I think I wouldn't say completely avoid, at least for some time. I think I would wait a little bit on IT services. Okay, not jump in at this point of time. If I'm holding something, then maybe I'll hold, but at this point, possibly be a little cautious on that side. Uh, Today, also one would want to watch out for how oil prices and some of those commodities. So if there's a declining trend in oil prices, then maybe those are good to have. But ones which get impacted, I may be a little cautious on the airlines at this point of time. Okay, from fresh entry, if you already have, definitely it's a longer term. So a lot of what I'm saying is, uh, I'm saying between now, typically February possibly is a time when things bottom out. So you could see volatility, and give it a 3 months maybe if you see global volatility out there. So and so that is actually my bigger concern, that seeing global markets, and if US has been little weak, Nasdaq has sort of come off a channel. So I would want to be a little bit wait and watch and see how global does, because if anything can take India down, because earnings have been reasonably good. So if anything can take India down, I think it's the global markets out there.
Okay, got it. IT stocks is something that you're cautious on. But I mean,
Yeah.
financials, there have been a consensus overweight across the fund houses. For you, how does it look like? Because, I mean, of course, PSU banks have had a good run up so far this year, but private lending stocks, they have been quite mixed, and they have not outperformed as much as the PSU lenders. Do you expect the trend to remain the same?
Yeah, so PSU definitely benefited, and we've sort of done well. We have, again, medium long term, we're very comfortable with financials, and I think you can see that loan growth has picked up from the data. So one is hoping that, so even the private sector banks and the NBFCs, etc., may benefit from this trend if it continues.
Okay, got it. Anil, yesterday we did see that majority of the capital market stocks did reacted on the back of the RBI's tightening of the lending norms. Any particular impact in terms of volume and liquidity are we seeing here? And of course, the earnings impact on the capital market stocks, be it your BSE, Angel One, or Grow for that matter?
Yeah, so unfortunately for a lot of these stocks, there has been impact after impact from regulator, right? So for a period of time now, it was the FNO from SEBI, etc., and various other regulatory changes which are coming in. So yes, in the short term, maybe it may result in volatility, but I think from the long term story, from the way I believe that the market is going to grow, okay, and the inflection point they are at. So I believe that many of these stocks are going to do very, very well. So one will have to possibly live through short-term volatility.
Okay, short-term volatility. Of course, today we are seeing a bit of a divergent performance. BSC has ended in the red. Angel One is, ending flat but with a positive bias. So yes, it's been a mixed performance today for the capital marketplace. But let's move on and talk about the export-oriented sectors. Anil, what do you think? I mean, we're expecting the first tranche of the trade deal with the US next week. I mean, of course, we've seen that on the back of this news, majority of the export-oriented names, be it your textiles or even shrimp stocks, had taken quite a bit of a, all of them were skyrocketed on the back of this news. Do you think that fundamentally we can relook at it at some of these plays?
Yeah, so I would be a little less optimistic, on the impact of the trade deal, right? Because one is, of course, we've seen recently that between the announcement and the actual, right, there's a huge time gap that is there. The second is that I mean the devil is in the detail. Okay, so we will have to see, are there any, what are the negative impacts that also come into it? Okay. The third is I think there will be a lag from when you actually see it in terms of performance. Okay, but definitely for some of the textile sectors, etc., which are been really badly impacted. I think it's great news, and but still we have still competitive positioning in Bangladesh and various other fine print in their deal, etc. Right? So I think it's good to be optimistic on some of those. Okay, and but I still say on time wise, I will still believe that it will be some time before you start seeing actually the benefits of it coming, because now once the trade deal is inked, then after that the whole set of you have to go after customers negotiations, yeah, and then there's a lag between what you actually see it. But for sectors are really impacted, definitely it is huge and positive.
Okay, got it, got it. But just one last question before I let you go, Anil. Of course, from an FIS perspective, where does India stand as of now? Because the Q3 earnings that did pan out was in line with majority of the market estimates. Then we have the India-US trade deal overhang, which has already been lifted. Of course, the interim trade deal details are yet to be out. But yes, at least the overhang has been lifted as of now. And now we even have the Infosys and Anthropic's collaboration in terms of the AI perspective. I mean, do you believe that at some point FIIs could return to India from a sustainable manner?
Yeah, definitely. So if you actually go back and look at it, when FIs are then extreme negative, right, in terms of their sales, and they are short on the FNO side, they are also buy points, right? So you may find that then subsequently, they sort of let go of their positions, and you find markets move up maybe on a shorter term basis. So you would find that there. I think the when will FIs come back, in my view, is when they are comfortable with valuations, and I think we are sort of much closer to that point, and that's I think the best part, since India has seen a bit of a time correction, and at least the large caps are where we were earlier. Okay, so since you're seeing a time correction, and in that period, some bit of earnings growth, there has been, and if you go back to the mid caps, etc., some of the growths are higher, so you will find that valuations in terms of P ratio, has come down by almost 10x, okay, on mid and small caps. So I think valuation-wise, we are sort of better. And however, you must keep in mind that FIs are actually already investing in emerging markets, and India has not benefited from it, but other emerging markets have got money. So in this space, FIs have prioritized value markets and gone and invested there. I think India will also come in, and again, I think in the next 3 months or so, I expect FIs to sort of come back and add momentum to Indian markets.
Okay, got it, got it. All right, all right. On that note, we have to let you go, Anil. But thank you so much for joining and connecting with us. All right, that's all we have for this edition of Closing Bell.